It was a widely anticipated move, but the Federal Reserve has announced that its second rate hike of the year has happened, signaling its confidence in the U.S. economy. Watchers think the U.S. central bank will raise rates again within this year, reflecting the Fed's previous forecast of 3 rate hikes in 2017. Kim Hyo-sun starts us off.
The U.S. Federal Reserve has raised its benchmark interest rate by a 1/4 percentage point. Following a 2-day meeting, the Fed announced on Wednesday that the rate hike brings the target range to 1 to 1.25%.
Today, the Federal Open Market Committee decided to raise the target range for the federal funds rate by 1/4 percentage point, bringing it to 1 to 1/4%.
The move reflects confidence in the economy, which the Fed described as great progress, including an increased number of jobs and a drop in the unemployment rate. Although it gave no hint on an additional rate hike this year, watchers foresee a similar move in the latter half of the year, reflecting the Fed's previous forecast. The Fed also stated it will reduce its securities holdings, reducing its $4.2 trillion portfolio of bonds and securities, most of which were bought during the global financial crisis.
Consistent with the principles and plans we released in 2014, this program would gradually decrease our reinvestments and initiate a gradual and largely predictable decline in our securities holdings.
The Fed's second rate hike this year now brings the target range for the federal funds rate on par with Korea's benchmark rate, which stands at 1.25%. Hyo-sun, Arirang News.